Welcome back to another episode of Key Factors. This is Mark Jones, your host, and we are powered by ReviewMyMortgage.com, which is the largest index of mortgage programs nationally. Today, I am joined by a longtime friend who is in the insurance business, James Cardenas.
Hello, everybody. Hello, world.
How you doing, man?
I'm doing fantastic.
It's been a minute, but I think all things happen when they're supposed to, and I want to share the first insurance piece with you, my friend.
Perfect. I think that hopefully I should have, by this point of 12 years in the industry, I better have learned something, or let's just say that. I hope I've learned something in the last 12 years.
I know you have. Mm-hmm. So James joins us and is co-owner of My Insurance Group. So James, tell us where you came from as far as starting in the business and where you're at now briefly.
Sure, absolutely. Well, I don't know that anyone ever grows up thinking that they're going to be an insurance agent. You know, I think I thought I was going to be a rock star or a football player or something like that. But I used all of those talents that I had grown into from playing sports and, you know, really wanted to achieve something in my life to helping people. So I think that insurance, in a weird way, naturally came easy to me.
Okay.
You know, pleasing people.
Pleasing people, yeah.
Working with people, you know, making sure that they're taken care of and their families are taken care of.
Protected.
Exactly.
I like that.
Yeah, for sure.
So you've been in the industry for 12 years now?
Yes, sir.
Man.
Yeah, it feels like a snap of a finger, to be honest with you. And I couldn't tell you, you know, the guy who started this business, I couldn't even tell you who that kid was.
So for those that cannot see us right now, James probably doesn't look a day over, 22.
Oh, I appreciate that. I appreciate that.
So tell us your extent in insurance thus far. Sure. Where did it begin and where you're at now?
Yeah, absolutely. So basically, when I first got into insurance, I started with a wholesale company, which only sold insurance for houses that were really hard to place.
Okay.
So, you know, these weren't these pretty 1990s homes, 2020 homes. These were the homes that were built in 1910, 1920, that they just couldn't find a market. Nobody else could place these. So it was a company called Texas Security General. And after working with them for about 2 years, I started to grow my business and I started to understand that, you know, maybe I need some more people to help me with this task in order to help as many people as I really want.
Okay. And at that time, you were a broker agent, a rep. What was that?
So actually at that point, I believe I was a captive agent with one particular managing general agency. And so after that, you know, I've never really done the captive route. Like you mentioned, there's independent and there's captive.
Right.
And I never was able, luckily, in my personal opinion, I did not take the captive route first. Being independent, as you know, gives us, you know, over 30, 40 companies to work with. And we really just thrive on offering our customers a different selection of products. And if you can make a customer somebody that really likes you for 5, 10, 15 years and they continue to do business with you, then you're winning.
No, absolutely. Absolutely. So your journey within this, going from, I guess, like a rep to having your own brokerage. I mean, I can imagine growing that.
I'll talk to you a little bit about that too, because that's an interesting story. So one night, usually around New Year's, kind of like right around this time, is when you start thinking, you know, there's got to be something more out there. And so what I did was I put an ad on Craigslist looking for more agents. And lo and behold, I started looking and there was at this time I was a captive agent, right? And I see.
Now explain to those listening, because we've got mortgage professionals, real estate professionals, and consumers tuning in. What is the difference between captive and what does that mean?
Exactly. So a captive agent is someone who is signed up with one insurance company and they can only sell one product. So
example?
I am going to say there's a company out there with, I don't want to say their name.
I'll say it.
For legal reasons.
I'll say
He's got the Mayhem is their logo. The
Which
guy.
one is that? State Farm?
It's Allstate. Allstate, right. So, you know, if you work for Allstate, you can only sell Allstate products, right?
Gotcha, yep.
If you're a captive agent. Now, you can also be what's called an independent agent. And independent agents, like we were talking about earlier, have 20 to 30 to 40 different options of different carriers they can put your home with. So each one of them has their own positives. You know, when you're a captive agent, you may receive better rates right from the carrier that the independent agent can't have. You get maybe more funding for marketing and advertising. Whereas if you're an independent, you've got to do all that stuff on your own.
That makes sense.
You got to fund all that.
We'll come back to that as we get further down the road.
So we move into second year of the agency. I said, hey, you know, I'd like to be something more. And I looked on Craigslist. I found somebody who says, hey, own your own agency, get to write with all these big name carriers, Allstate, Travelers, Nationwide, a couple different other ones. And you kind of just got me thinking, right? And at that point, I was probably about 24, 25 years old.
I was going to say, yeah, that's 10 years ago. So we were still way wet behind the ears.
Exactly. And so thank goodness I was just like you, kind of chasing your dreams, had that mentality. And when you are ready for an opportunity, and it
seems to present itself
at the right time.
At the right time,
and
everything.
If you grab it, if you reach out and grab the opportunity and do the hard work that it takes. Yeah, I know you know this. And
100%.
I'm pointing at Mark right now. I know that you might not be able to see this on video, but I know that he knows everything that I'm talking about. You run with it. And yes, you're going to do some hard work, but you will see the fruits of your labor over time.
Absolutely.
And so we hired a in-office CSR, somebody to help us with our paperwork, and we just kind of grew out from there. So 10, 12 years later, at this point, we have about 14 licensed agents in our office, and they help us provide a high level of service to the new business that comes in, to the servicing that we do for the current policies, and the retention part of it as well, right? Making sure that the people know who we are. As an agency, we're not Allstate, we're not State Farm, we don't have these huge budgets. So we have to build a brand within our raving fans that are inside of our book of business.
That's awesome. And I want to congratulate you, man. That's
thank you.
You've done it. And I say you've done it like you're done, but we both know you're not done. There's always constantly growing in this industry. And if you stop prospecting, if you stop building those relationships like you're talking about, right, then it tends to stop. It is true. If you don't use it, you lose it type situation.
Right.
Now let's get into some basic things. Now that our listeners know that they're speaking with an expert in the field of insurance.
Yes, sir.
And in my opinion, all things insurance, and including life and health and things like that, because you guys end up referring that out to somebody that you know and trust, I would imagine, right?
That's very true. We have those connections.
Absolutely. Yeah. So in the essence of being, I guess, painting a proper picture for the listeners, if we have consumers that are tuning in at the moment, we want to make sure that they do understand what insurance is, because we have some folks that maybe their parents have taken care of it for them. They never had to rent anything. So having renter's insurance wasn't a thing, and auto insurance was just taken care of by your parents, because I believe you can stay on your parents' policy until you're how old?
So on health insurance, it used to be 25. On auto insurance, you can stay on mom and dad's policy as long as they let you. There's a couple different specifics on that, but typically mom and dad will say, hey, this is just getting too expensive.
Right.
Maybe when you're 18 to 20, hey, you can't afford to pay those high insurance prices, because getting a policy with a young driver on it is exponentially more expensive than two older married folks.
Sure.
You know what I mean?
So here, key factor, you guys, stay on your parents' insurance below the radar in regards to not getting tickets, drive a Pinto instead of the new sports car, and you'll save yourself quite a bit.
Right, yeah. And then also make sure that you don't get a ticket on mom and dad's insurance, because guess what? They'll probably ask you to get off soon, because tickets exponentially drive up the price of the insurance, right? And accidents, right?
Absolutely. Yep. So going to that, what is the basic definition of insurance?
Perfect.
That what you do?
So insurance is basically a pool of money that you, me, and 10 other like-minded people throw inside the pool and say, hey, look, we want to make sure that if you have an accident, there's enough money to take care of you, or vice versa. If I have an accident, I'm using your money to help me pay for my stuff, which is great in essence, because I might not have $100,000 cash to rebuild my house,
right,
or a fire. So in essence, insurance is a large pool that everyone puts their money in, and if someone has a claim, you're able to recover the money out of the pool, and almost like a crowdfunded kind of thing. It's kind of interesting.
Yeah, that makes sense. I mean, I would say I always relate things to gambling and things of that nature. You're basically hedging. You take the risk in driving. You take the risk in owning certain things. You take the risk in anything that we do in regards to a certain asset or liability.
Mm-hmm.
Well, you're just paying your dues for something to go wrong, because eventually it does.
Yes. Yes. Which leads me into, I did a little bit of research before I got here. And it's not about if something goes wrong at your house, it's when.
It's when. Yeah. We all know. Absolutely.
Exactly. So the most common claims, and I'm going to tell you when you buy a house, this is what's going to happen. I'm not saying if it's going to happen. Most likely these things are going to happen. These catastrophes are going to happen if you move into a house.
And this is all having to do with a home.
A home.
Okay, awesome.
Yes,
So that actually was going to be my next question, which
Yes.
is why is it important to have insurance on your actual property?
Yes.
So
Okay.
by all means, take it away.
Let me rewind because, I got a little wound up on that one.
You got hyped
I
up.
did. I was ready for that. Before I tell you exactly what is going to happen when you move into home insurance, let's talk about what is property insurance. What does it cover? So I'll get into that. So basically, if you, from a renter's policy all the way up to a homeowner's policy to a landlord policy, any property that you own, you should hedge your bets and make sure that you are insuring it properly. So if there's a theft, if there's a fire, if a flood happens, you want to make sure that your property's covered. And 95% of us do it. And a lot of us are required to do it. If we have an apartment, right? The apartment says, hey, I need $300,000 of liability coverage before I let you move into this place. Because if somebody breaks their leg at your pad, guess what? They could sue you. And if you don't have any coverage, then they'll sue us, the apartment complex.
Right.
Or, this is my favorite part when we start getting into stories. Okay, so like if, let's just say somebody falls asleep with a cigarette in their mouth and they burn down the entire apartment complex. That type of loss could directly be related to a suit to that person who made that mistake. So that's why the apartments want you to have that liability coverage. So,
and it would not be the apartment's fault. Now, mind you, that apartment's still going to have their own insurance, but you're correct. In most places, they require you to have a renter's policy. Another scenario, if you have a lien on your property, and I'm talking about auto or real property, you're required to maintain insurance. And we'll talk, we can ask now, the instance where you have forced insurance on your mortgage.
Right.
But we'll talk about that down the road.
Yeah.
Keep going.
And no, that's totally fine. I'm following with you.
Two ADD dudes on the microphones.
That is so true. Trust me, I've already thought about like 5 things while Mark was talking. So I'm trying to stay with him. But it's true. So moving into, okay, now we're talking about the renter's policy. Let's talk about the home policy. What are the things that are covered? You've got, these are the things that are going to happen to you when you move into a home insurance. Okay. Number 1, you are going to have hail damage and wind damage at your home. Flat out, bottom line, period. It doesn't,
inevitable.
It is inevitable. And I know you're a homeowner, so...
Oh, it's happened.
Of course.
It's already happened. Yep.
Exactly. And so those claims are actually 34% of the amount of claims, phone calls that come in.
Wow.
It's like almost 1/3.
Yeah, that's a lot.
So something else that's going to happen, and I'm sorry.
No, by all means, keep going. This is great information.
I'm sorry to the listener because this is my favorite part. I'm like, I get to tell the story and like kind of...
Because it does happen. And the entire concept behind insurance is everybody wants the cheapest policy, but then when it comes to something happening, they're upset when it's not covered.
Ding, ding, ding. He said the magic word.
So I love that you're being fully transparent with this, and our listeners get to hear an expert's opinion in addition to explanation and scenarios. These are not things that you went and Googled. These are scenarios that have happened.
1,000%. And so the next scenario that's going to happen at your home, unfortunately, is you're going to have a non-weather water-related claim. So a lot of people have their AC unit in their attic, right?
Yep.
If the drip pan gets overflowed, then boom, your drywall above your roof is coming down. At least it's going to get soaked until you figure out that it's leaking.
And those of us that live in Texas know how possible that is during the summer months.
Of course, because you know how that drain gets all nasty and mildewy. And so the primary drain ends up not working anymore. And so your secondary drain kicks in. Well, if your secondary drain ends up getting old and mildewy, guess what happens?
Right. It's going to overflow.
Overflows the pan, comes through the roof, and...
now you're replacing your ceiling.
Exactly. Yeah, exactly. And hopefully, you weren't out of town, right?
Right.
You could come home to everything's on the floor.
A swimming pool, indoor.
Yeah, exactly. And my parents have gone through that, and I've seen that before, so it's not pretty. And then don't forget about the hot water heater, right?
Yeah, man.
So every like 8 to 10 years, especially if you're not using soft water, those things can bust, and it's going to, it could happen for sure. I don't know if there's any other water related claims that you want to talk about, but
I can't think of anything off the top. I mean, like a super soaker fight inside. I don't know if you'd want to use an insurance claim for all that.
I know
that's
that
a
happens.
lot. Balloon fight.
That happens at the Jones houses all the time.
I'm just going with real life experience.
I've seen the
what
pictures.
have I had to pay a deductible on?
Yeah, I got it. Okay, so here's the next one. So as hard as it is to believe, I know that we're in Texas, but freezing And water damage as a result of freezing is a huge one. Now, we don't see this a whole lot in Texas,
Right.
but when we did have the freeze a year or two ago, people's water pipes burst and then boom, water's all over the place as soon as it melts, right? So you would be surprised how much money it takes to repair that type of damage.
Yeah.
Because
no, I'm not surprised,
right.
But people would absolutely be surprised at that.
It's pretty significant. We're not just talking about when these water pipes turn back on, they're going full bore and it's water soaking one whole corner of a house. You know what I mean?
Yeah.
So by that point, it's disastrous.
So let's say, given those scenarios that we know have occurred, or else they would not be a talking point, and something that is definitely relatable to other homeowners, I'm sure those that are listening can probably be thinking of a scenario that occurred and you're laughing yourself or kicking yourself for forgetting to turn something off or whatnot. But when it comes to you selecting the right policy for your customer, so now that we know it's important to have insurance tied to your mortgage and why those scenarios would be super important to save you money in the long run for the hedge of insurance, how do you know what policies to pick for your, I guess, you know what? Before we do that, let's go before when a customer is shopping for a home and it's quote time.
That's exactly right. I'm going to take this segment and say that this is the segment called Who You Calling?
Okay, very good. Yeah.
Who are you calling first, right? Who's the average consumer calling first? And you and me, we've been in this industry, finance, insurance for a while. So it's kind of second nature to us. But when you think about the average consumer, sometimes it baffles me when I do think about who are they calling? Like, who do they think about first? And it's typically maybe their auto insurance, right?
Sure.
You know, that 1-800 number that they have where they can either go online, get themselves a quote, which is dangerous because you don't know what you're getting, or you just call that 1-800 number and you speak to an agent and they seem friendly and they're from 5 states away and they're trying to hit a quota and they're just trying to they want to get you taken care of. But at the same time, you're not getting that feel of an agency who knows the local area and very, very experienced agents.
Well, we'll compare it to an online lender, call center.
Exactly.
Not relationship based.
Exactly. So who's your first call? And the question is, who should be your first call? And what people actually do is completely different.
Sure.
Because it's insurance, right? Nobody wants to pay attention to their insurance. And unfortunately, like I used to be.
And we're going to get into that because I've got a pretty good question or a topic later down the road on this thing. So don't go too much. Surprise.
Exactly.
Yeah.
Okay. Yeah, exactly. So, but it's like, if you're not looking to explore what's actually going on with your insurance, and you're going to make that phone call to the 1-800 number. But what you should actually do is find a local independent agent with great Google reviews and a great track history.
Okay.
Right? Or ask a friend who's using a great agent that they love.
And once they do find that, let's say they do take that route.
Right.
What is that conversation like? What are some things that you as an individual or independent broker will do for them up front before they've even purchased the home?
The pre-qualification questions of a insurance broker that's local and the feel of the entire experience can be way more satisfying. Mm-hmm. And at the end of the day, hopefully, if the agent is doing their due diligence and taking care of you and not just order taking. 1-800 numbers are order takers. Mm-hmm. Independent agents live and die by the customer's satisfaction rate. And if you are an independent agent who gives bad service to your clients, you will not be in business long. You know what I mean?
Yeah.
So that is why, number one, it's important to use the independent agent. That being said, the independent agent is going to, and I can't speak for all of them, Mark.
Sure.
But they should be looking out for your best interest because you can actually go and, I don't know how else to say this, but you know where their office is. Right. You can go down there and snatch them up by the shirt and they're a real person. Like it's like you feel like you have a little bit of control, whereas the 1-800 number type of scenario, when you go and talk to James the first time and he sells you a policy, when you call back and you have a problem with that policy or they didn't do a claim, they did you wrong on a claim, can't talk to James again at the 1-800 number.
Well, I mean, how about if you're in the process of purchasing a home, will the 1-800 insurance company run a clue report to see if there's anything wrong with the property?
Right. Back to going into the process of the loan. Exactly. So a clue report is definitely great. having a background check on the house to provide to the buyer to make sure that they're very comfortable with purchasing this house. It's the next step in making sure that this thing actually gets closed is huge. And that's a huge value that the independent agent brings. So step one, find an independent agent. Step two, make sure that they're vetted and make sure that they're covering all the questions that they're supposed to. If I'm not asking you, do you have any jewelry or do you have any dogs at your house? And I'm just writing
information.
I'm just writing policies and closing books. Trust me, we've all been there. But as an agent who's been in the industry this long, I can tell you that those small questions not only build rapport with the client and the agent, but keep your butt out of hot water later on down the road. So it's a lot of these small coverages that...
And I don't think consumers realize the impact that, let's say, having a poodle over a Doberman Pinscher or something like that. I don't know.
Sure.
But as an example, those types of details make all the difference in someone's policy.
Exactly. Making sure that the agent's asking you what's your occupation. You might think that's a weird question, but guess what? That plays into your insurance rate.
Sure. You guys are risk analysis experts.
Exactly.
And essentially, if this said policy to protect your home that you're getting ready to make the largest purchase of your life on is inaccurate or not up to speed, or even in the case, let's say in the end, it's way more than you had expected and you were relying on your payment, this is one thing that 100% directly is correlated to the payment. It affects your payment directly.
Absolutely.
Because your mortgage is made up of principal, interest, taxes, and insurance.
And I'll tell you what you can't do when your house burns down and you don't, have insurance is you can't pay for your house note. Or let's just say a room burns in your house.
Well, that leads me to forced place insurance. There's been scenarios where I'll get a call from a customer that says, hey, I got a piece of mail or a letter from the current servicer of the loan. And they said that they put some insurance on because my insurance lapsed or I need to show proof of insurance.
Right.
What is that about?
Okay, so nobody likes getting insurance paperwork in the mail. Mm-hmm. And especially when you see your bank telling you that your insurance is not up to date.
Yeah.
You're just like, it's so confusing. And to me, I just get frustrated. And I think that a lot of other people out there may get frustrated, but it's absolutely necessary to find out what's causing the problem and why are you getting these letters. It's not something that you can throw away. But what's actually happening is that force placed insurance, if your bank doesn't think that you have insurance on your property, they will put their own insurance on there.
Okay.
But their insurance costs 4 or 5 times as much as a regular insurance policy costs, right? So you start paying your house note every month and all of a sudden you see it's gone
spikes. It spikes, yeah.
Right? By $1,000 and you're going, what's going on, man? And may very well be that you've gotten forced placed on that policy there. So, and it's a real simple fix. You just call the office, they get you a regular insurance policy and you submit that to the bank.
And then they remove it and all is well.
All is right in the world.
I gotcha. And what would be reasons why that would happen?
Why would a policy cancel?
Maybe why would the lender not have your policy? Either did it lapse?
Here's a great point. So when somebody goes through, I guess it's a mortgage, or you're a mortgage broker or
mortgage banker.
Mortgage banker,
we're
right?
Mortgage bankers.
And so after they sell off the loan to Chase, Wells Fargo, Mr. Cooper, whoever it is, right? The insurance company is supposed to update the information on their policy. And when they update that information, they send that over to Wells Fargo, Mr. Cooper, whoever, and they say, hey, we're the new insurance company on file. Now, if the transition at 90 days between when the bank sells your loan to
the servicer,
that's going to go smooth. That's going to happen.
Right.
But if the right paperwork doesn't get updated on your insurance policy by the time you renew at 12 months, the insurance company is trying to bill the original bank that you closed your loan with. And that's where the miscommunication happens. The right invoice doesn't go to the updated servicer or the updated mortgage company. It still goes to the original people who closed the loan.
Correct. So for the newer loan officers in the industry or consumers that get asked this question, mortgage e-clause is typically what they're looking for the where to get their payment when something goes wrong or each year when they pay it out. And you'll hear this question come from the insurance company directly. They will ask the lender, what is the mortgagee clause? And they'll send that over, and that's what gets transferred when the note is actually sold to the servicer from the broker, banker, mortgage company, etc.
Absolutely. Absolutely. Yeah. I've got a couple other things, but I'm going to I want you to guide me to the promised land, sir.
So you had mentioned a bit ago, most consumers instantly go directly to where they either have renter's insurance or auto insurance. So I wanted to talk briefly about the bundle.
Sure.
You see many commercials about it. Flo talks about it religiously,
Right.
and all her minions and all the other big companies. And I'll relate that to interest rate in the mortgage industry, to where in the mortgage business, you're seeing advertisements, tons of dollars spent in Google ads, social media, and most of them are targeting rates. It's kind of like a facade or a smoke and mirrors. Hey, look over here. This is how we're going to get your attention, and then we will do what we do. The bundle, in my opinion, is kind of the same thing. They're going, hey, you can save money if we get all of it. So what is the real deal with the bundle?
Okay, so as insurance agents, sometimes we feel like we have a stigma that we're like used car salesmen.
Yeah.
And it's like, oh God, my insurance guy's calling me.
And I can relate. I mean, mortgage professionals, same concept.
Sure. I'm with you. And so what knocks people off guard is when they get an agent who actually is doing their job right. So I'm actually calling to wish you a happy, mid-year checkup right on your policy. And I'm also calling to let you know, let me look at your portfolio because I can save you real dollars. But none of that really gets there until you can build that trust with the client, right? But a well taken care of client is somebody who is bundled, somebody who has a good agent, somebody who's bundled. So it's not a bad thing.
Absolutely.
It is a great thing to be bundled with an agent that you trust. You're going to save money pretty much every time. So, and that's one of the other things I wanted to talk about was that a mistake that people make is they don't keep their insurance agent informed of the different things that are going on out there.
The changes,
right? Hey, I got a security system. Hey, I've got water alarms that tell me if my AC is dripping on the ground, right? And so it'll start buzzing and beeping. It's called like a smart home meter.
That's cool.
Yeah.
I didn't even know that existed.
Yeah, there's a lot of things. And also another thing is where people don't realize that your smoke detector, okay, most people have like the alarm for their police to connect. Like, hey, somebody breaks in my house and the police automatically, that's a discount right there automatically. But if your smoke detectors also alert ADT or whoever to send the fire department, it's a huge discount.
Gotcha.
It's huge. And most people don't even know about that. So making sure that you're collecting on your bundle discount and all the other things, keeping your insurance agent updated will help you save the most money in the end.
Gotcha. Okay. So you mentioned doing an annual type review with your customers. And I do the same thing with ours on mortgage. And a lot of the top producers do the same thing, which leads me to, I guess, longevity with one company is not necessarily a good thing when it comes to insurance. Am I wrong in saying that? And I'm not talking insurance broker. I'm talking about courier.
Sure. So no, you're not. 9 times out of 10, if you haven't had your changed an insurance company in 7 to 10, 3 to 7 years, you're probably overpaying. That being said, there are insurance companies that actually value a good client. And so if I haven't had any claims with Travelers in the last 10 years and my credit score is great, they realize that I'm a strong customer, they'll keep my rate low for a while, as long as they can, if their algorithms are supporting the type of profile of customer that I am. Every insurance company has their own appetite. So Hartford probably may like people over 60.
But you as the broker knows that about that company or that courier to be able to know what to provide or what to present to your customers.
Appetite, understanding the appetite for each company is totally key. So I've got customers in Houston where I would never even think about putting them with a company that I'm putting somebody with in San Antonio.
Right. And why is that?
Well, because, oh Lord, I hope I have time to explain all that. So certain companies got burned bad by honoring imagine going into a hurricane zone. So if, let's just say, company A says, I'm going to insure all of Texas, right? And all of a sudden, they don't realize how dangerous the South Padre area is and the Galveston area. If that company experiences a major hurricane,
major catastrophe, something, hurricane, those types of things.
Yeah, tsunami, whatever, any of that
natural stuff. Disaster was the word I was looking for.
Exactly. For example, in the Corpus area, there's a small town in Rockport that was hit like a freight train by Hurricane Harvey in 2017. And so the stories of people not having adequate coverage or major insurance carriers that took years to pay out on these things, you don't have to look far to hear those stories.
Right. And that's caused from over leverage, exposure to the market. They've got too many policies in one area, I would imagine.
Exactly. Maybe their reinsurance wasn't that great, because even the insurance companies got insurance. You know what I mean?
Yeah.
So experiencing something like that will almost nearly could take an insurance company under. And so some companies say, look, I'm just not even going to mess with those risks, right? So back to the original question, why doesn't company A write in Corpus anymore? Well, because they know that the risk that they're taking is much greater than the reward.
They took a literal bath at one point in time.
Exactly. Yeah.
Yeah, it makes perfect sense.
And what I was reading to you was actually an actual client, somebody in one of our realtor groups that had pretty much went on an insurance rant, and he says, hey man, and this leads me to this other segment of deductible, right?
Right.
He says, man, I would rather deal with the mafia than deal with an insurance company, and that's like an old adage, like an old saying, and as an insurance agent, I try not to take that kind of stuff personally, but it's sad that people actually have to feel like the insurance companies are worse than dealing with the mafia. So that being said, once again, it's super, super critical to find an insurance agent that is versed in what they do. They've got a good system. They're easy to get a hold of. And whether the reviews are good or the people who use them say are raving fans, that's the real key in getting an insurance agent.
And typically, a consumer shopping for insurance will go with, let's say, like you said, auto insurance, who they already have that, and they probably got through them because of a commercial that they saw, some catchy jingle of some guy getting beat up.
They'll take the least path of resistance.
And that representative call center is not going to know what companies are currently overexposed, higher rates, things of that nature.
Absolutely.
Which leads me to something that I don't know if I should get into it, but I'm going to anyway, which I think they're a national company now, USAA. We have seen for the past, let's say 9 years, quite a bit of higher policies for the same properties in comparison to other companies.
Sometimes with less coverage.
And in those scenarios, one of the things that we would notice a while back, which was they were over-insuring the property, meaning, let's say the property cost, I don't know, $300,000 to replace. They were insuring it for $450,000. Now I'm seeing them with a notice on the insurance policy about you're not able to overcharge someone for their insurance, things of that nature, but the policies are still higher.
Sure.
I mean, the coverage came down to what it's supposed to be, but the policy is still higher. I mean, it's
funny how that works.
Yeah. I mean, are you paying for the name? What is the situation there? Because some people live and die by it.
Make sure I don't get myself in legal trouble here. But sometimes
this is all opinionated. I mean, we don't know the answers.
That's a great point. This is my opinion. Everybody knows the old thing, kind of drinking the Kool-Aid. You know what I'm saying? Like, hey, you're not looking at the facts. You're being sold on emotion. And so great way to sell people, by the way. I know everybody out there in marketing is like, sometimes you don't want to just go straight for the sale. You go for the emotion, and then that draws the sale.
And I will say USAA does a great job of starting with the why.
Right.
I was actually just talking about this earlier today with some of my newer loan officers. In their value proposition, they absolutely start with the why, kind of like Apple does with their technology and what they provide to us.
And it's a great way to market.
But in aspect of, are you really getting what you pay for? And could you find that same comparable coverage in another company and pay, I mean, in some cases, half?
Right. Yeah. Most people don't look under the hood, right? It's like, hey, bright and shiny. This is my community. I mean, they've got 4 of the 5 boxes checked.
Sure.
But at the end of the day, and I know that you know this, we'll find people who have been with those type of companies, whether it's USAA or State Farm or any other one of the Super Bowl ad commercials.
Sure.
Right.
Sure.
And they're like, I can't believe that. I mean, number one, they'll think we're a scam, right? Why is your rate so much lower?
Right.
It doesn't make sense. Number two, am I really getting the same coverages? And then when they find out they're getting more coverages and we actually show it to them on paper, the bubble kind of bursts.
And I'll give you a scenario. I think it was 2 years into the industry. My father-in-law and I were sitting out back in Houston, and he's in a location where hail damage, flood, all that good stuff.
Mhm.
So it was pays pretty penny for his insurance. And I had asked him if he had shopped in a while. And he said, no, I'm with such and such company. I've been with them for years and years and years.
Right.
And I explained to him this very concept that if you stay with them quite some time, they almost kind of not necessarily forget about you, but they bank on the fact that they've always had you. And once he actually did go and shop, he cut his insurance in half and then ended up going and shopping his cell phone and shopping everything else. But
exactly.
It just goes to show, and I think you see this in a lot of the marketing ads with cell phones, for example. Newer customers get all these fun perks, whereas the people that have been loyal, you have to leave and then come back.
That is a great point. And golly, that's a great point. If I sat here and I thought about that, I could really just ponder on that in particular. But, you know, I think that a good insurance company should always be making sure that they're taking care of their best clients.
Yeah.
You know, I've been with Progressive for 10 years. And you know, it's funny, like it's like a video game, right? It's like you start at Emerald.
Sure.
Then you move into Gold and Platinum, and I don't know, I'm at Zeta now, or I don't know what I'm at. I'm on Galaxy mode.
Zelda.
Exactly.
Zelda mode.
And they give you some perks. Hey, you'll get a deductible free discount or whatever, but you better bet your butt that if you get into an accident and they have to pay out quite a bit, they're going to come looking for that money. And so that's when sometimes you re-enter the market. Actually, I want to give you one interesting concept that somebody shared with me. So let's just say I go out and I get an auto policy, or I get a home policy, and I enter the market with no claims. I've got a decent credit score, and boom, I get a decent policy, $1,000 a year. Well, 6 months into it, I get a claim, right? I have a claim. I run into my garage.
Okay.
Right. Oops. Right. So
I've been there. Didn't call insurance for that one.
Yeah. And you know,
but yes, absolutely.
So if when I call my insurance company, they say, hey, cool, here's your check. Here's a brand new garage. Oh, by the way, when we renew your policy, it's going to be double. And I'm like, oh God, well, I mean, I get why they're doing that, but guess what I'm going to do as a consumer? I'm going to go shop around.
Yeah, I'm out.
Right, exactly. Well, the problem that people face is that sometimes when they go reshop the market, you're not you're not at the bottom area where you're under the radar anymore.
Sure.
You are now on the radar. You have a claim on your record, and now you're trying to shop for insurance.
Everybody can see that. Yeah.
And so what ends up happening is that you don't get a better rate. And so you got to stick with where you're at right now.
Love the one you're with.
Exactly. I mean, it is what it is. But that's a little fun fact that people don't know that, hey, yeah, oh, Mr. or Mrs., I've got the power to go shop anywhere. Yeah, you do. But guess what? Everybody can see your dirty laundry.
Right, right.
Know? And so they're going to give you a rate based on their statistics and their appetite. And then
so that leads to another something that I don't know. Is it an insurance hack? And you tell me if I'm wrong. Ethically, I don't know what the ethics are on it, but logistically, let's say, for example, I did back into my garage.
Allegedly.
And instead of it just taking out my garage door, it brought down the house. Shit, It's gone. That being the case, would it be in your best interest to call another company, get insurance locked up, and then make the claim with the current insurance company that you're with? Because I don't believe that there's anything wrong with anyone being overinsured. You can go take out policy. I can take out a policy on your car.
Sure. So,
I mean, I don't know.
Now that is a heck of a scenario.
You brought that up, and that's kind of what popped in my head.
I love creativity. That's why I'm here on you got millennial market talk. You've got Key factors.
Yes, sir.
And I mean, I love them both. I love both these podcasts. And it's like, that's why I'm here. It's because you've got some great
challenging the mind.
That's exactly right.
I mean, it's the same concept in mortgage. We live within guidelines. The guidelines, are they black and white? Yes, they are, but they're also up for interpretation. So that said individual that ran into their garage, if they turned around and instead of calling James to make that claim because they're currently with you, they called Allstate and said, you know what, I'm thinking about switching. Yeah, let's get the policy locked up. Fantastic. Then called James and said, hey, my wife backed up into the...
Sure. Yeah, absolutely.
Notice I blamed it on Kristen.
Yeah. No, so most people are, let's just say this. Insurance companies have better lawyers than we do.
Okay. Right? There you go. Yeah.
And so in the policy, that 90-page policy thing you get that nobody
no
looks
one reads.
At?
Yep.
Back to that, right? And remind me that we have to cover, I got a rant on that later, but that type of information is inside of that policy jacket that says, hey, look, there are some responsibilities of the homeowner or the person who's getting insurance. You have responsibilities. You've got to be honest with us. You can't have more than one policy on one property. And if you've got a pending claim, you can't be getting insurance. So, for that particular scenario that you had just mentioned,
it's probably within their bylaws or their agreement or policy that says if you are getting insurance somewhere else, you're in.
Or if you have a current claim open, right? Or if you're about to have a current claim open.
That's where that gray comes in, because I don't have a claim yet. I haven't called James.
Exactly. It's true. And there's a couple of fail safes in there that the insurance company has to make sure that everything's on the up and up.
That makes sense. I would imagine you wait 24 hours thinking that you're slick to call James.
Oh, I love people who
and
are
all
smarter.
Of a sudden, boom, Allstate, whoever, USA calls you back and says, hey, that insurance policy we just wrote? Your claim came through.
Oh, 1,000%, 100,000%. Or the adjuster is going to go by there, right? And take a look at your property, take photos of it. This is what we're insuring this year? Oh, wow. It's funny. They didn't mention that there was a garage that was busted. So,
and I have seen, I don't know any personally, that have gotten convicted of insurance fraud. So just to kind of bring it back to that outlandish logic, it's in their bylaws somewhere, shape, or form. Both companies, the one that you're going to, trying to cheat out of, etc. Don't try and cheat the system.
Oh my God.
Bottom line.
Yeah.
They've already thought of it.
Exactly. That's in life and especially with insurance, I mean, it's like, hey, like you want to talk about playing with the mafia? Hey, you want to play with my money?
Yeah.
Hey, let me tell you, dude, you don't want them kind of problems.
I mean, and it's true in regards to, let's say, the powerhouses that run what we do financially. You've got mortgage that drives a lot of the market, mortgage-backed securities, et cetera, and insurance policies, because insurance policies, they're taking that money and investing in other policies to keep those. I mean, they're not just going to sit here and collect a whole bunch of money from people and then pay out when all of these things happen and not do anything with all this money that's sitting there.
Yeah. Oh, man. You don't want to talk about getting into the financials. At the end of the day, and I'm glad you brought this up, it's all hugs and kisses when either the agent or the insurance company's taking your money or you're signing the policy. Right? It's all hugs and kisses that day. The day that it's not is when you actually have a claim. And then you really get to test out your agent. Did they write the policy correctly? If I agreed to something, was I told what I'm agreeing to? Or what's missing out of this agreement? What are the 4 things that I should be looking for? A great question is, okay, we know what's covered, but what's not covered?
Yeah. And I think that's a question that most consumers don't ask.
And I'll be honest with you, a lot of insurance agents don't know what's not covered. Because that's a gray line. I mean, as black and white as they try to make it, honestly, there is a gray area sometimes in the claim. And so the number one dissatisfaction talking point about insurance is a denial of a claim. And it's sad, and it happens to people all the time. I mean, it's going to happen to 5,000 people today in the world. And the problem is that most people don't have an insurance advocate.
And that's actually what I was going to ask you directly, which as you know, we have our own insurance thing going, but I remember when you were our insurance broker, and for many years, if there was something that went wrong, you could contact your insurance broker, and James in those scenarios would be able to walk you through it and help you understand what you signed up for, what it covers, and how you need to go about this.
Yeah. I mean, there's been countless times, right, where people will make a claim and they say, hey, James, I don't feel like I got treated fairly on my claim. And that's when that 1-800 number is not where you want to be. You don't want the 1-800 number when you're going up against the insurance company. You need an advocate. You need an independent agent on your side so they can advise you. I mean, you and I don't walk into an attorney. We don't walk into the courtroom and represent ourselves because there's just too many laws and too much knowledge that we need to know.
100%.
So that's why it's important to have somebody in most of your financial situations, whether it's your money guy, that you're giving putting into the market with, they're there to advise you and they're there to guide you. Same thing with insurance, same thing with finance. If it's got to do with money, you probably want somebody who knows what they're doing so they can guide you.
And I think that is the root inspiration for reviewmymortgage.com, inspiration for this podcast in providing experts. You can call anybody to get low rates, but what you get what you pay for. A representative is not an expert. Nothing wrong or bad against a representative, but you're not an expert. I would like to only provide expert advice, expert opinions, expert resources, tools, referrals, things of that nature, because I know the caliber in which they're going to provide that customer service, that level of expertise in their field. Matter of fact, I used to have a truck that said, stay in your lane, bro.
Right. Yeah.
Why? Because I do what I do best.
Right.
You do what you do best. We're here to help each other in whatever that may be.
And you're right. And so, I don't know, maybe I'm a little bit cynical on representatives, but I don't know that any of the 1-800 numbers are going to have somebody with 15 years experience pick up the phone and say, let me ask you the important questions and have them and build a relationship individually with our agency, their family, and have them feel as taken care of as they would a local, highly regarded independent agent.
Absolutely.
And that's just a flag I fly.
I like that.
It's
Well, I mean, you would not be here today, 12 years deep into the industry, expert, probably fantastic book of business with happy customers and referral partners, which leads me to my next segment, which is getting to where you are. Sure. You grew by way of advertisement, marketing, and partnership. In regards to, let's say, new lenders, new realtors that are out there, if you're a consumer, you can tune out. No, I'm kidding.
Right.
Keep going. Yeah, keep listening. But this is kind of more for the loan officers and realtors out there. Why is it important to partner with a insurance broker, independent, versus, I guess it would just be not at all, essentially, because you can't make a relationship with a representative from Allstate if when you call the 1-800 number, you don't ever know when you get who.
Okay, yeah. Try getting a clue or background check report from a 1-800 number. That ain't happening.
Yeah. What helped you in growing the business, and how does that help others in our industry leverage and grow?
Well, there's a lot of things you can do. There's a few things you can do to be effective.
Okay.
And I have done everything from bag individual things of popcorn, run all the way around my city, and and actually build an actual genuine relationship with people. That probably did more for my brand than it did for my pocketbook.
I agree.
You know what I mean?
Yeah, I mean, you're dependable.
Right. But I guess one of the things that I wasn't, when you're first starting and making errors, you don't realize that, that was actually a good play for our brand because we were able to get out in front of people, right? Number one, you got to check the landscape. You got to check the scenery. Like, just like a guy like me back in the day, I would just dive right in and I would rock boats, ruffle feathers, try to elbow people out.
I remember. It was so much fun.
It's like, and I'm older now and I don't have that kind of piss and vinegar in me anymore. But what you want to do is you really want to scope the scene out. Get on scene. You're a young agent and you're like, wow, I want to take over the world and there's so much potential out there. And then you go out and you start knocking on doors and you wear the soles off the shoes of your feet and you do feel accomplished. But there's also a strategy play behind the whole thing.
Sure. So what do you directly can a realtor or mortgage professional utilize a partnership to grow their own business?
All about value. Always start with the value,
Love
right?
That.
And I know that you know that.
Absolutely.
Right?
100%.
With those, that's just the cloth we're cut from is we're going to bring the value first and then everything else will fall into place, right? So for realtors, if you wanted to provide value to a realtor, obviously you said it first, the forensics report on the house, the clue report, right? I call it a forensics report.
No, and that's what it is. You're correct. Yeah.
But there's also legalities to that, right? You've got to make sure that you're getting the right information from your referral source, John Smith, date of birth, email, phone number. Is he really serious about buying this house? Because you can't just be throwing out clue reports all over the place because you could get in trouble for that. So I can't tell you how many people.
And I'll just make sure that the listeners understand that is typically done once you've already signed the contract and are in your inspection period, which means you've got a 7, 10, 5, sometimes couple day window to do your inspections to determine if this is truly the house that you're going to move forward with. And at that time, you've already deposited your earnest money into escrow.
Right. And so, I mean, I can look at my phone right now and there's probably 4 or 5 realtors within the last month who have shot a quick question over to me, right? Being able to have access to a professional, because insurance agents are directly in relation to what lenders do and what realtors do. And lenders and realtors want to look great, right?
Yeah.
They want to look great for their clients. They want to provide their client with a high level of service, more so than anything, I'd say, because it's a direct reflection on them. So you having a real relationship with an agent versus calling a different insurance agent every single transaction, right? And like begging them to, most insurance agents would probably try to put their arms around you, but you got to have a go-to for every time, right? You don't want to be spotty because you'll always be in this panic mode of like, how
do I get a hold of them? What's the best method?
Right.
Are they going to respond quickly?
Like have your own.
Are they going to give me the right information?
Yeah, exactly. Right. Like have your own advisors. I know that you guys do that. And I know that a lot of the realtors that I know, they have their couple of lenders that they use. They have their insurance. Usually they only have one insurance agent because we're not that important, you know?
Right.
But we do get things done for them and we help the transaction. And so that's the best thing you can do.
And I'm going to give a true, transparent, direct relationship benefit from having a broker as a mortgage professional is you will have instances where a consumer is trying to purchase X amount of property. And in the process, your insurance, as mentioned, insurance, taxes, all of those 4 items directly affect your actual mortgage payment. In the same token, your mortgage payment affects your debt to income ratio. So there are certain scenarios to where you've got a borrower that accepted a contract, you're saving a deal, and unfortunately, they don't qualify by a couple of percentage points on their debt to income ratio. But having an insurance broker on your side, they're able to shop multiple different couriers at the same time to be able to say, okay, I need to get a policy that is $800 a year and no more, putting my all-in payment at $70, whatever the case may be, to lower those ratios. I mean, that has helped on many deals when they come in as save the deals, things of that nature. Right. And the other person may or may not have had a contact or a partnership with a broker that can help them that way.
I saw a video, not kidding you, on the way over here. And it was saying, if you don't know, you should know that not all insurance policies are created equal and that this can make or break a closing or not.
A qualification. Absolutely. Yeah. And I want to continue to, in each episode, give some sense of pulling back the curtain on what people typically don't know or don't get to see.
Right. And then if you want to pull the curtain back even more, is that, what is the insurance agent actually doing when they go in and they manipulate that policy to get the premium down, right? And not manipulate in a bad way, just make changes, right? So number one, they'll probably look at the coverages, the endorsements, which are add-on coverages that can be put on hold. Not saying that typically what ends up happening is that we'll close the file and then about a day or two later, we'll just contact the client immediately or on the day of closing and say, hey, look, remember those coverages that
to put the correct policy in place.
Exactly.
Yeah.
Remember we took off, service line coverage, if your water pipe bursts in your front yard, hey, I know it's like, $60, but I know that you want this coverage. So let's just get it taken care of. Right.
And some may see that as unethical, but I'm here to say, I don't believe it is, because you've got situations in the qualification side of getting a mortgage and a home that you've got a husband and wife. Wife can't be used on the actual mortgage, but she's making money, but doesn't have the credit score to qualify or has additional income, things of that nature that the mortgage banker doesn't get to use to qualify, but they know that they do deserve the correct policy.
Yes. Speaking about ethics, so I would definitely say that a move like that we explain is definitely still on the way lighter gray side. Now, you want to talk about some agents who may do something like, let's talk about unethical, right?
Yeah. Okay. Give us an unethical.
Something that you don't want the agent to do is say, okay, cool. Well, the deductible was $1,200 for the original policy. Let's just take that deductible up to like $9,500, right? And so once again, deductible, once the insurance, if there's a claim, the insured has to come out of pocket with the deductible before the insurance company kicks in, right? And pays off the rest. Well, something unethical would be if you increase the deductible to $9,500 and you never circled back around with that customer to get their deductible back, right?
And then a catastrophe happens and bam,
or if
they don't have the $9,000 in this scenario.
Now you can't pay your mortgage.
And you can't pay, and then it's just a domino effect. So that's another key factor in regards to having a broker that knows what the heck they're doing and cares about their customer enough to follow up to get it right.
I want to say that everybody in the world cares for sure. What ends up happening, I think, is you get so busy because this insurance industry is, the profit margin is very small. And so in order to be profitable, sometimes you are just hustling.
You've got to do a lot of policies.
Got to do a lot of policies. It's volume, right? Mm-hmm. So if you're not setting up your reminder system, if you don't even a young agent might not even have a reminder system to go back and on the day of closing and make the changes that they're supposed to get the policy where it's supposed to be. They may care, but sometimes it just falls through the cracks.
Absolutely.
You know how that goes.
I do. So circling around to wrap this up, insurance, I know people believe that it's important.
Right. Oh, yeah.
But those that have never had it don't know how important it is. Those that have never had it don't know how to shop for it. And I think you've done a great job of articulating how that process should go, what the importance are of having a broker in your back pocket, both from a consumer and a professional partner relationship.
Yep.
Is there anything that you want to leave us with in regards to?
You should see me right now. I'm crawling at the mic. Yeah, I got one more thing. I did want to go on a little bit of a rant just because it's fun.
I've got it written down right here, rant.
Yes. So why is it, and this isn't applying to everybody, this is just my opinion on some things, and I'm just being a little bit funny and facetious, but why is it that the insurance agent cares more about the policy than the customer? Why is it that the insurance agent cares more about the policy than the client who actually bought the policy?
And this is something that I think anyone listening right now should stop and think about.
Yeah.
Because you are 100% correct. I don't know what the stat is, but if you asked to guess, I'd say maybe 80% or more don't even know what's in their policies.
Yeah, and I think it boils down to, I don't think it's that they don't care, like I was just mentioning, that was just a play on words. I think it's that when I really sit down and I think, people don't know what all that garbage is coming in the mail.
Sure. Sure.
I'm getting packets of 12, 15-page documents for a regular bill,
right?
For a regular renewal. It's confusing. It's lawyer language. It literally makes you want to fall asleep. You could read it as material in your bed to fall asleep with. So I understand. And I understand that insurance companies don't make it easy. I'm not here to be the person who defends all the insurance companies and, says, well, you should just read it because it's important enough to you. I think that there should be an effort by both parties to make, just like the financial industry is going through, the 1003 that
100%. And I make it mandatory for the loan officers to meet with their customer, whether in person or a Zoom call. Being the pandemic occurred, it makes it easier for that to actually happen so that both the lender and the consumer have an opportunity to ask questions, to give explanations over and above what just the documents say. And you find that leaves longer lasting relationships between a customer and a professional experience, but not everybody does it.
That's probably the key. And hopefully
see, you almost said it. Key factor.
This is probably the key factor. And hopefully that people take it away is that, like I said, we're not walking into the courtroom representing ourselves, but we still know what we want to accomplish. But we just don't have to go through the 5-6 years of college to be a lawyer to get what we want accomplished taken care of in the courtroom. Same thing with insurance. If you don't want to become an insurance expert, and I don't recommend anybody does, you should definitely get somebody who's seasoned in that so that when that paperwork comes, all you got to do is make a phone call.
Absolutely. Absolutely. And how powerful that is. James, thank you. It's been a great conversation. It's been great to see you. It's been so damn long, but I want to end with, guys, insurance definitely needed, definitely something that we will be paying until who knows, we'll be paying it.
Oh, yeah.
But again, thanks for tuning in. This is your host, Mark Jones, and we are powered by ReviewMyMortgage.com, which is the largest index of mortgage programs nationally. And we'll catch you on the next one.
Bye, guys.